Hi guys, welcome back to Real Estate Informed, where we keep you up to date on all things real estate. Today we're going to be talking about Chase Bank and how they're tightening their lending standards because of this crisis we're going through. So let's get through it. And you know what? I'm going to link the article down below so you guys can check it out for yourselves. So it says right here. Chase Bank is now accepting no credit scores less than 700, and that they're making a minimum down payment of 20%, just so that they can, I guess you could say, prepare for this, pandemic that we're going through and the future ramifications of that. So they're just kind of buckling down right now on their credit, which makes sense, but it's not just. Chase. I mean, this article talks about Chase, but it's other non-bank lenders too, such as Quicken Loans, Rocket Mortgage, these type, and even smaller credit unions. These kind of non-bank lenders are usually easier to get a loan on versus like Bank of America, U.S. Bank. They're a little bit stricter, but in my opinion, I work in the real estate field. It's been universal. Everyone's tightening up. And so even the FHA. So the FHA used to have a 580 credit score. Now they bumped it up to 640, so that they're tightening up, which makes sense, because banks, before this crisis hit, banks were just, lending out money. You could have gotten an FHA loan at 580 credit score, which, out of what's the 800 plus is like, perfect credit score, almost perfect. I believe the highest you can get is 840. I don't even remember, but so I think the highest you can get is 840. So 580. And you can buy a house with 3.5% down. That was before the pandemic. Now they're tightening up. And I mean, we're talking about, 1 in 5 Americans lost their job during this pandemic. 26.5 million is what we're at with the unemployment, and that roughly equates to 20% of America is unemployed right now. So it makes sense that banks, especially Chase and even non-bank lenders, are tightening down. The ramifications of this is when it could be a month from now, it could be 6 months from now, when we kind of come out of this pandemic. Buying a house is going to be a lot more difficult than it was before the pandemic, and I think that's what people need to prepare for. I feel like the government is giving out all these stimulus checks, and some people need the money and they need it for food right now. Some people don't need the money and they're just putting it in their savings accounts. Either way, people are going to have money in their bank accounts, but then what if you don't have the credit and if you don't have the job history, then how are you going to get the loan? It just shows you that the banking industry has changed, and what ultimately, I work in real estate. I feel like ultimately what we're going to do is we're going to start with a mortgage crisis. Mortgage standards are going to tighten up to the point even tighter than before. But I mean, even FHA, the government is tightening up on their loans, going from 580 to 640 credit scores. That tightening up is going to shorten the buyer pool, and when you shorten the buyer pool and the buyer pool gets smaller, then when you list your house for sale. All right, so let's just say that we're before the pandemic, and so you list your house for sale, and you list your house for sale, and there's a buyer pool. There's a set number of buyer pool, and there's 100 people in that buyer pool. Now that buyer pool is full of people willing to give 3.5% down at a 580 credit score. That's also people who can get a loan at Chase for 5% down, 10% down. We're talking pre-pandemic, 5% down, 10% down, with credit scores in the 600s. Okay, now let's do post-pandemic, whenever we get out of this, and now you list your house for sale, and those 100 people that you had that was in your buyer pool, well, now the FHA has raised their credit scores from 580 to 640. So you just dumped out 20 to 30 people right there. Then You got Chase Bank saying that we want 700 or more credit score. Okay, so you just dumped out another 20 or 30 people there. So then Chase Banks wants 20% down, which is a lot of. So then you just dumped another 20 or 30 people right there. So then you're left with 10 people of the 100 you started with pre-pandemic to now. And so what happens in a scenario like that is you have more sellers than you have buyers. And so, rules of simple supply and demand, it'll just say that, house prices will go down. So house prices will go down. It just won't go down in, instantly. It'll take a couple of months. People will list their houses, and the houses will, won't sell because now you went from 100 buyers to 10 buyers in that pool that you had. And so now, when those buyers aren't ready to buy because they think it's too, expensive, then you're going to have to lower the price. And then it's going to take months and months and months, as into like if a house in a neighborhood had to lower its price 3 times, then in that same neighborhood, if another house goes for sale, it knows it has to list it at the same price that the other one sold for. Do you know what I mean? And once a house is listed, it takes 30 to 45 days, 30 to 60 days actually, for it to actually sell after it goes pending. So, once again, we're talking 1 to 2 months of listing house, lowering the price. Then as soon as it goes pending, we're talking 30 to 60 days till it sells. And then in that same neighborhood, another house goes up for sale. And then, so the timeline gets stretched from, instantly to 6 months or more before we actually see real price decreases. And this is all on we getting back to work, May, June, July. I mean, how long is this going to extend? And another thing I want to say is, how steep are those real estate declines, whether it's 5%, 10%, 15%, 20%, it could be as much as 50%. How do we know how steep it's going to be? I was doing some research on Wuhan, China, and they opened up their city, but people were still not shopping, still not going to restaurants because of fear of this disease. So when you open up America in May, June, July, whenever we do, and we flatten that curve and we get the cases down severely, and we open up America, subscribe, leave your comments below of any questions you have, and stay safe out there, guys.